Good afternoon. My name is Raymond Vos from Prague, here with the Q1 2022 results. I am happy to say that the first quarter of this year has been very positive. We have under construction 1,140,000 square meter, 50% pre-leased, and we do that at a 10% yield on cost.
We made a good start to the year, and we are on track and focused on delivering on our plans with disciplined and profitable growth, strong performance in rental growth and in our other key metrics. These show the strength and resilience of our business. To give you the key highlights of our Q1 results, and it's worth noting when making year-on-year comparisons that Deutsche Industrie is included and consolidated from February of this year. In Q1, we achieved like-for-like rental growth of 4.8% year-on-year across our whole portfolio. We've grown our total net rental income to over 107 million euros, an impressive step up of 37%. Our net valuation gain on investment property is lower at 27.5 million euros. This reflects the increase in construction costs to complete our projects under development. But most importantly, we have maintained our market-leading yield on cost at over 10%. Our profit of 60 million euros and our earnings per share of 14 cents are in line with our expectations. Our investment portfolio grew substantially to total over 9.5 billion euros, and our net tangible assets per share have grown by 32% to 12.33 euros at the end of Q1. Our loan to value is in line with our financing strategy at 44%, and we also have a very strong liquidity position with cash of over 1.1 billion euros at the end of Q1 and a committed RCF of another 400 million euros, together giving us great financial strength and flexibility. The cost of our debt is 1.1%, and the average maturity of our debt is over 6 years.
I like to explain the way CTP has been working for the past 24 years, which is actually that CTP have two activities. There is a construction company, a company who actually develops properties on land which CTP owns, and upon completion, the second activity, owning properties, a portfolio of buildings which CTP rent to its tenants. The income producing part of our business, we've seen record high rental income during the first quarter with high occupancy at around 95%, with a WALT of approximately 6.4 years till lease expiry. CTP built exclusively for its own portfolio. We build for future, we build parks. There are projects where we have been building continuously more than 20 years. During the first quarter of 2022 is the acquisition of Deutsche Industrie. CTP has now feet on the ground in Germany. The portfolio, which consists out of more than 90 properties located throughout Germany, we have been able to identify land where we can build additional property, and we have currently a pipeline of more than 200,000 square meters, which we will start to construct during 2022. We are very happy, as it is challenging to get land for industrial logistic property development throughout Germany. Our plan is to open offices in 3 regions. With that, we will be active in 3 Western European countries, the Netherlands, Germany, and Austria. We have 7 other markets. 4 of them are the core markets, or where CTP started: Czech Republic, Slovakia, Hungary, and Romania. And we see this region of Europe as our home market. We have been able to grow market share, and we continue to see strong demand from our clients. The remaining 3 markets we call growth markets, most importantly Poland, the largest economy in Central Europe. Which brings me to ESG which we have been doing before they called it ESG. As I explained, long-term, nothing short. We do not develop to trade, we develop to hold, and that does make a lot of difference. A local community we are part of, where we invest for the future with different education programs in our clubhouses. The solar rooftop plants which we have installed performed better than expected. Many of our clients like more warehouse space so they can store more product because they are afraid that maybe supply get interrupted. What we see is nearshoring. The region of Central Europe is not about cheap, it's much more about reliability and about motivated workforce together with infrastructure, which we believe also long-term is the best location for companies to manufacture for the European market. Because of that, we do believe that there will be possibilities for us to acquire properties at terms which were different than they were 3 months ago. CTP also work on a 2026 business plan for the next 5 years, which obviously takes into account various different scenarios. Also believe going forward that our develop to hold strategy may be better than other models.
And we are confident in our core strengths and confident in our business model. Thank you for your attention, and we look forward to your question.
Yeah, once again, welcome, and thank you very much for joining this morning. My name is Richard Wilkinson, the Group CFO. We would now like to open the floor for your questions.
Thank you. If you would like to ask a question, please press star followed by the number 1 on your telephone keypads. If you have joined via the webcast, please enter a text question at the bottom of the screen. If you choose to withdraw your question, please press star followed by the number 2. When preparing to ask your question, please ensure your phone is unmuted locally. Please note there may be a slight pause while we wait for questions. Our first question today comes from Emma Frew of Barclays. Emma, please go ahead. Your line is open.
Hi, team. Thanks for the presentation. 3 questions from me. Firstly, are you still confident that you're going to hit your full year guidance of 60%? Then, also, are you still confident in the high level of completions? We've got 1.5 million in our model to hit your GLA target. So just wondering if you can give a bit more colour on how confident you are with those. And then finally, can you talk a bit more about the impact of construction costs on development? How are you expecting them to impact you over the year? Thanks.
Yeah, thank you very much. Emma, yes, as we said in the video, the earnings per share is in line with our guidance. So yes, we remain fully confident in that. On the completions, yes, we are also on track to complete the 1.5 million that we guided for with our full year numbers. And with regard to construction costs, Q1 was the quarter where we saw the real increase in construction costs come through into our budget. That's reflected in the reduced valuation gain in Q1. We see the construction costs slowly starting to come back down. So we think that the worst there is behind us.
Thanks very much. It's actually Eleanor, not Emma, but thanks anyway.
Oh, Emma. Sorry. Thank you. Sorry. Excuse me.
Thank you. And our next question comes from Jonathan Kownator of Goldman Sachs. Jonathan, please go ahead. Your line is open.
Good morning. Thank you for taking my question. The first question is on the demand side. Can you give us a bit more color, perhaps country by country or region by region, about the shape of demand, whether it's accelerating, whether it's slowing down, if you notice any specific shift in the type of tenants that require space? That's the first question. And following up on the question of construction costs, you're saying, the worst is probably behind us and they're starting to come down. Can you perhaps be a bit more specific in terms of the level of inflation that you've seen, and what are the specific items where you're seeing a bit of softening there? Thanks.
Hey, good morning, Jonathan. It's Raymond speaking. Thanks for your questions. I will start with answering the first question you had about demand. What we see throughout the region, honestly, is high occupancy, point one. Maybe start with, and you can see it also from occupancy. It is average around 5-6% vacancy, which is what we have and had, and in line with our plan. That's good. And then if you look at the different markets, occupancy a bit higher in the Czech Republic, our largest market, our home market, most of the portfolio in the Czech Republic. It is also because there is just less supply, not just from CTP, but from any other player in the Czech Republic. If you want a bit more detail on what the Czech Republic, then our largest market, talk about, we do continue to see strong demand, which is both from companies involved in light industrial kind of manufacturing in different industries. Continues to strong demand there, has been and is still. We see a bit more companies who say, look, I like some more warehouse space because I would like to have some extra inventory. They like to have spare parts on stock and other products. That's what we see on one hand. On the other hand, also you see they need to keep a product in stock because they can't really deliver to their clients yet, because their clients have maybe issues with their supply chain. So they're one way or the other, they're building stock, and therefore they need warehouse space. E-commerce is also continues to grow in different parts of the region, and these companies also require space. But back on the nearshoring and the inventory and all of that is happening. Can also be a direct because of Ukraine, because they had to close down factories and then brought it to Central Europe. That's what we see. We see it from the past, from people, clients who say, look, reliability is important for us. We've seen COVID. We've seen what happened. Suez Channel was closed for a while. There's all kind of different interruptions. We can't have that. We need to make sure that we have product. So there is an increasing demand for space. And that's why record high occupancy in the Czech Republic. But also maybe the second largest market, Romania, in and around Bucharest mostly, because that's more than 80% of the portfolio is in and around Bucharest. We have seen, of course, in the past year, significant take-up. Companies like Kingfisher, also IKEA, Maersk, Schenker, so logistic service providers. And I can't disclose, but we are in finalizing a deal with yet another large logistic service provider. So that is positive, and that Romania is not just for Bucharest or Romania, but it's for the region. Companies like Maersk, they use Romania, Bucharest as a hub for the region, and they also out of their supply to other countries, including Bulgaria, but also Turkey, Istanbul, etc. So that region. So also there we continue to see strong demand. And similar goes for maybe another market, Poland. You've seen the news. We have extended our activities in Poland. We've done acquisitions of land because we think this is the right moment with the uncertainty, with the market changing. There are opportunities which we haven't seen like 3-6 months ago for us to acquire land at very competitive prices in order to extend our activities, because we do believe also Poland mid-long term is definitely a place where it's ideal for manufacturing. So I'm not talking about demand we see now. I'm also talking about future demand we see from talking to clients. As you know, 80% of all business we do comes from existing clients, and clients clearly communicate with us, look, if manufacturing, if we want to supply with European market, then out of Europe, we can't rely on Asia. It's too far away, it's too complicated, it's too difficult, it's too expensive. It's not about cheap, it's about reliability. And if you then want to manufacture, or if you want to supply, for example, the German market, you would go to Poland because it's an ideal location, a lot of support from the government, a lot of new infrastructure. So that's also what we see in terms of take-up, but also in terms of future demand for the coming years for projects which we are now working on, which is nearshoring, which is changing supply chain, which is then, in countries like Poland, definitely beneficial. And also, we think that what we see from some of our peers is that they still have buildings under construction, but pipeline for next year, for 2023, is less. So the amount of projects which will come to the market next year is less. Our developed to hold, so we do not rely on selling. Therefore, we believe will be less supply coming to the market, which we think to benefit from. So we see that also that would help us grow our business going forward. So talk about demand today, but also demand for the next 24 months and in the different sectors throughout the region. With respect, does this answer your question with respect to demand and occupancy?
Yeah, mostly. Any comments on Germany already?
Yeah, well, Germany. I think I'm in Germany. Actually, I'm in Germany every week, one day. In order to build a team, we plan to hire 50 people, open up 3 offices, making good progress. Some beautiful people joining, and now from June 1st, other people joined from July 1st and August as well, both commercial as well as construction. But the portfolio is I mean, what we bought is better than we thought. It's all fully leased. That is some vacancy, but that's structural vacancy of some of the units which we need to do something else with. That's a little bit of office component which we haven't focused on. So, but no, that's very positive. Also, what you see, of course, there has been announcements made from Scholz, from the government here, for the the defense industry. There we see additional demand. So the German the properties are very good. Occupancy is high, but the tenants which we got through the acquisition is beautiful portfolio of tenants with whom we can grow further, either in Germany or in the region of Central Europe as well. So that is very positive. Also, we have identified land within the portfolio where we can do a 200,000 square meter new build, and that's what we are working on. At the same time, we're also buying land in Germany, and so that is also in order to grow and to the business here in throughout Germany. So that is very positive so far indeed. Good. And also with respect to other Western Europe.
Sorry, just to sum up then, from a demand perspective, you're painting a very positive picture in nearshoring. The current situation is not effectively leading to any slowdown from any type of tenants. I mean, obviously in Western Europe, you had a slowdown of take-up from online retailers. You're not seeing that in your regions yet.
No, I think it comes down back to the market. Yeah, if you look at the markets, we concluded previously. Of course, we shared also. If you compare the amount of warehouse space per capita, if you look at stock, it's clear that it's a shortage. If you look at Romania, 90 million people, the amount of stock, existing warehouse space, is far below any other European market. And so, we are just somewhere else. It's not that there's oversupply or that's not in our region. And point one, if you speak about warehouse space. And if you talk about light manufacturing or manufacturing, it can be. There's a crisis, okay, because there is the world is upside down, right? So that people don't have money to spend. What's going to happen? Yeah, there will be a restructuring, change. It will have an impact on economies, on the society, and all of that. Need to sit tight. We need to be prepared and alert for what's going to come. But what we also learned from the past, if companies have production facilities and they have facilities throughout Europe, then the one they're not going to close is the one in Central Europe. That's the newest, that's the best performing, that's where the people cost less per hour, etc., etc. So we actually think that if there is these kind of developments coming, that could also, that's what we hear from our tenants, talking to them about their future plans and their strategies and also their different scenarios, which is the Worst case scenario, then indeed, then also for future we see strong demand. At the moment, we continue to, buildings are full, so occupancy is high, and indeed, to answer, yes, we do see strong demand for future developments indeed from existing clients. As again, 80% of all what we do is for existing clients. Those are our long-term partners. Other Western European market, maybe if you said Germany, other one is Austria. It's pretty small. We have 4 projects in and around Vienna. There is 2 under construction, and also there we've seen good take up. We've done a deal for the East Vienna project, which is close to the Vienna airport. That is good so far. Yes, indeed.
Okay, thanks. And on construction costs, any specific costs where you see prices receding more than others?
Yeah, Richard mentioned it already, and maybe I should also mention that CTP works as an in-house general contractor. That means that we take full responsibility and control of the construction process. That means also that we do not rely on a general contractor, but instead we buy building materials from the source. So we buy the materials from the factory. So the wall panels we buy from the producer, but also the frame we buy at the factory. Now, and that as you know, that we have been doing over the past years, and of course you need to then employ more people to run all of that processes. We are currently 550 employees, so it's a bit more work, but in return you keep the 10-15% which a general contractor normally makes of profit in your pocket. It's cheaper, but also you are in control of the process. And talking to suppliers, then I mean they're busy still. But if you talk about what about second half of this year? What about this first half of 2023? What does your order book look like? What is it? And then we see that we can do deals at lower rates as what it was before during maybe Q1 or first half of 2022. So yes, there is it doesn't continue to increase. It's the other way around. That we see a bit of here and there where we can buy for lower as what we have been doing so far. As also you saw in the movie and in the press release during Q1, we have been able to do 10% yield on cost, which again is a result of us being able to to build for competitive prices, and of course our tenants accept a bit higher rent. But it's a lot of work from the guys at procurement, at value engineering teams, and the construction teams. But talking to suppliers, indeed, we see that there are possibilities to buy for reasonable offer. It doesn't continue to increase; it comes down a little bit.
So you're expecting the 10% to be maintained in effect?
Yes, correct.
Thank you very much.
You're welcome.
Thank you. And as a reminder, if you would like to ask a question today, please press star followed by the number 1 on your telephone keypads. If you have joined via the webcast, please enter a text question at the bottom of the screen. And our next question on the phone line comes from Alvaro Serrano of BNP Paribas. Alvaro, please go ahead. Your line is open.
Yeah, hello, guys. A few questions on my side. Just to have it clear. So what you are seeing right now in the market is that construction costs or some materials prices are coming down, or it's just that the growth we've seen over the last quarters is just cooling down? Trying to understand exactly what is happening.
Yeah, exactly. So what we see is that what we have seen is that there is shortage of material, price continue to increase so far, and long delivery times now, and so on and so on. And now we see, if we talk about the second half of this year, delivery, so second half 2022, we see that there is building materials available, and that we stop to see increase, and we see that here and there we can do deals at lower rates as what we have been doing so far for delivery during the second half of 2022. And also if you look into deliveries for 2023, we see that we can do deals better than what we had to pay during the first half of 2022.
Okay, so on that basis, we can expect that your yield on cost should increase in the coming quarters, because in the end, it has declined around 150 basis points over the last year, reflecting those construction costs, and you haven't been able to absorb that increase in construction costs through higher rents or offset the impact by lower yields on the market. So the question is, when and until what level can we expect that yield on cost to improve on that basis, on that new information you are mentioning?
Well, what I can say is that during 2021, last year, we have been able to do a 10% yield on cost. I can also confirm that during the first quarter of this year, we have been able to do 10% yield on cost. Numbers don't lie. It's all in the report. And with respect to the outlook and for this year as well as for next year, we'll do our best.
Okay. Well, your best. But I mean, if construction costs are moderating and even some of materials are declining, we should expect in 18 months yield on cost to improve again, given the outlook for rental growth in logistics, as many companies are disclosing these days, right?
Yeah, it could be. It could even be better. If what I think is true, that there is a strong demand and there is less supply to the market, and we have the benefit of the land bank, which we bought at below 50 euros, as you see from the annual report, then all of that adding together, yeah, you could assume that it's even going to be better than what it is today. But that is something I cannot guarantee, obviously. But yeah, there is definitely a full focus and opportunities, definitely, absolutely, very confident about that. That that we will be able to continue at this rate.
Okay, and the last one on my side, on demand, if we have to, if we try to break down your clients between 3PLs, e-commerce, direct users or end clients, which are the ones willing to pay higher rents, or they are more in a rush to increase their logistic capacity?
It works like that. That obviously, over the past 6 months, 12 months, we have seen rental growth. Also at CTP, 4.8% average. So tenants, clients are willing and they need to pay more for renting warehouse space. So that's what it is today. And then that is also the market, and we try to as one of the companies offering space, and we are part of the market in some countries, market leaders with 25-30% market share. But obviously, you need to be within what the market price is. What I'm trying to say is that there is not a whole lot of alternatives for occupiers, for tenants. I mean, they will have to accept one way or the other a higher price for the property they are renting, whether this is a new build or whether this is a building which we have built in the past, and they will then occupy, and they have been and are willing and are able to accept a price increase. Yes, indeed. And that goes for throughout all of the different tenants we have, whether it is 3PLs. You know that in our top 10 we have Schenker, DHL, DSV, so the world's largest logistic service providers. Those are among our top 10 tenants, and they are able and happy to accept that. Also because it is not like the neighbor, our competitor, would have space available for less. That's not the case. So, and as well for nearshoring, and that often goes with a lot of savings, because our clients who do value-add activity often have other production facilities in Europe, and bringing activity to Eastern European or Central European countries creates benefits in terms of savings on labor costs, more effective and efficient, especially if it comes with consolidation. Instead of having 3 factories, they would now have one larger facility and brand new. They save energy cost. It's just a newer building, cheaper to maintain, better layouts, lower running costs. So that comes with many benefits, and therefore, honestly, the rent is not the most crucial, not the most important part for them. So it just makes a lot of business sense for these tenants to consolidate or move and bring activity to Europe. And a similar goes for, if you talk about inventory, I mean, instead of having shipments from Asia or wherever, they would have a bit more warehouse space here, which again costs a bit more money in terms of renting more space, but it also takes away all the concern about not having products, so you can't complete and sell your product, and that is worth a lot. So yeah, I think it makes sense overall for our tenants, which are doing very well. I mean, we have a very strong client base with no bad debt. We have no bankruptcies in the portfolio. Hardly ever had. Very strong, very healthy tenants who we work with, especially in Central Europe.
Thank you. We will now move on to webcast questions. We have a question from Cesare Benatak of Erste Group. Could you please give more details on the revelation of the property portfolio in 1Q 2022? Thank you.
Yeah, Cesare, what we revalued at the end of Q1 was only the income producing assets under development, so only the projects that were in construction at the end of Q1. That's a standard RICS valuation calculation of expected value on completion with a number of deductions. For construction costs to complete, and also depending on how far away the construction is, deduction for general uncertainty about the ability to complete. That is nothing to do with us. That is the methodology. So that is all that was revalued in Q1.
Thank you. And we have another question from the webcast from Christopher Tong at UBS. Pre-lets were 44% on total projects under construction, which is lower than historically. What is the progress like in reaching higher pre-lets? Many thanks.
Good morning. Thank you, Christopher. This is Raymond speaking. No, I don't think this is lower than it was before. As I mentioned, we work as in-house general contractor, and typically we go out and build buildings ourselves, and therefore also are in full control of the progress and completing properties in our parks. And what happens is if you say, okay, it's 40 or 50% pre-lease, that comes down to you build a building of 40,000 square meter or 20,000 square meter if you have a 10,000 square meter pre-lease. So that is in reality how it works. So you have a 20,000 square meter building, you have a pre-lease of 10,000 square meters, so half of that, 50%, and then we go out and start develop a 20,000 square meter building. The 10,000 square meter we will complete, and that will be handed over to the tenant. And during construction, we lease out the remaining part, and then we will be completing that once we have a tenant secured. In the meantime, we have probably started to build another property. And if not so, if we see, hey, demand disappear, or there is no demand, not enough, then we're going to slow down on the construction. And if we have to, we would even interrupt it, stop it, etc. And we can do groundworks, foundation, put up the frame. And that is how we have been working and continue to work. What is the benefit is that you have something underway, which you would therefore satisfy the demand of the market. If there is no demand, okay, then you then postpone the completion of that unit till a bit later. We will then not complete that part of the building, and instead of spending, I don't know, 450 or 400 euro per square meter, we will only spend 200 because it will be half complete, and it will be complete upon once we have a lease in place. But again, as I mentioned earlier, we see strong demand, continue to see strong demand. However, I am fully aware of the fact that there are lots of things going on in the world. It's not only the war, the energy crisis, the inflation, the rising interest costs, which will have impact on the market overall and everywhere, and definitely also for CTP. It's not that we are not hit by this or there's no impact, but also it will have significant impact for the market and for our competitors as well. And therefore, it also opens up a lot of opportunity. And the way we run and work and our business is hands-on. Richard and myself, we've known each other for more than 20 years, have been working together for 20 years. I've run CTP for 24 years now with a hands-on attitude and approach, and I visit markets and talk to clients all the time, every day, see what's going on. So that I rather see as an opportunity than a threat. So positive and confident that this is definitely the right way forward, and not concerned about creating oversupply or creating vacancies. No. Hope that answers it, Christoph. Sure.
Yeah, and maybe Raymond, I could just add. I think we see here the opportunity of the unpre-let, because we see demand and we see rental increase. So sometimes it's also that we're not necessarily in a hurry to rent out the space to the first person, because we think there may be a better deal to come.
Thank you. And as a final reminder, if you would like to ask a question today via the webcast, please enter a text question at the bottom of the screen. And we have two questions from Francesca Faragini at ING. I have C1 2 billion estimates for investment in 2022. Do you think that is a realistic amount? Thanks. And the second question is, DIR is now consolidated. What are your very first actions and priorities for this portfolio, and how many capex do you expect to deploy in the region for 2022? Thanks.
Yeah, maybe I take the first one and the second half of the second one, and I think Raymond already answered the first part of the second question in terms of the actions on tier. Yeah, Francesca, I think that's a reasonable ballpark. The 1.2 billion in terms of the capex in the tier portfolio. This year, it will not be so much in terms of maintaining or in terms of developing, because we will start the first developments on the land maybe in the second half of this year, so not so much going there. So I think we will be somewhere around 10 million euros in 2022 in terms of maintenance. And in terms of the actions,
I can add to that.
Yeah.
Yeah, sorry, Rich. Yeah, no, I have the 10 million also in my overview here. I'm actually sitting in Berlin. This is indeed the case, and that's also confirmed and agreed in the budget. And then that's the maintenance and repairs. Then on top of that, we, as Richard explained, we will start with new developments and construction, but that's not that's the investments which we do is not the money we will spend on the income producing part of the portfolio. But we do plan to start with a number of projects, construction during the second half of 2022 here in Germany. That will include a project south of Berlin, as well as something in Bremen and a third location. Actually, even a fourth, I think, if we get the building permit. But that's a bit too early. But back to the what we do. Low-hanging fruit, or how do you call improvements to make it better here at DIR. And that is insource things. So there used to be a few people running the portfolio, and they outsourced all of the asset management and all of that, and we insourced that. So we are on track to hire 50 people. By end of next year, we think to be 57 people from 35 employees now during 2022. So that means get people on board to run and grow the business here in Germany. And that is in all fronts. So talk to the tenants, talk to the cities where we have property, see if we can buy more land, extend the investments, the projects, but also talk to tenants about, are they happy, what is their business like, and can we grow with them also outside of Germany? And then, of course, can we buy land in Germany to grow the business? So insourcing, get quality, talented, ambitious, hardworking people on board here at CTP. And so in Germany, and so far we have been very lucky and happy and successful with the recruitment. And there are some very good people joining, also people who have been working on the other side, but with the portfolio, so they have knowledge of the tenants and the properties here at Deutsche Industrie.
Thank you. I'll move on to the next question. We have two from Peter Zabala of PKO Bank. What's the impact of DIR consolidation on NRI and EPRA ADJ earnings in 1Q 2022? And the second question, what are your expectations with regard to logistics yield movement in 2022? Thank you.
Mm-hmm. Yeah, thanks, Piotr. So if you look at the impact of DIR on NRI, it's around 3 million euros a month for now, until we get more traction, but that's what it is for the first 2 months of the consolidation, and it's mildly accretive in Q1, as we announced when we announced the deal in October of last year. In terms of the other expenses, the main item here is the 10 million donation that we made to the UNHCR to support the refugee crisis in the Ukraine.
Thank you. I'll move on to the next question from Keshav Mandara of Damek Group. Can you talk about the asset valuation trend in CTP markets? Do you see any yield expansion? Thank you.
Regarding valuation yield in our core markets, the gross valuation yield of our portfolio at the end of 2021 was 6.8%, significantly higher than Western European yields. So we have consistently maintained that we expect there to be yield compression between Central European and Western European yields. There's two ways that can happen. One is Central European yields come down, the other one is Western European yields go up, and Central European yields we don't at the moment see any reason to expect yields to go up in Central Europe. I think in some countries they will still be coming down in the first half of 2022.
Thank you. And our next question comes from Andre Bandy of Westeam about the fact that you have an energy producer license. How will this affect the price of energy paid by tenants? Thank you.
We have the energy production license in Romania as we are installing photovoltaic plants on some of our roofs, and that is a regulatory requirement. What the photovoltaic plants on our roofs allow us to do is to source green energy on site for our tenants, which is a significant benefit both to the tenants but also to the grid, because it reduces the amount of transmission that is needed. So wherever you can produce and consume on site, that is obviously best. we are constrained in terms of what price we're allowed to sell at to our tenants. We have to sell at the market price.
Thank you. We currently have no further questions, so I'll hand the call back over to Richard for any closing remarks.
Yes, we'd like to thank you very much for your attention and your interest, and look forward to the ongoing dialogue with you all. Thank you very much.